All right. Good morning, everyone. Let's get it going. All right. Last night's session in the States was kind of a little bit of a lower open, and then we really just drifted up for the entire session in the last half an hour. Markets sold off pretty aggressively in the last half an hour, which is something we haven't seen in a long time, just to make note of that. In the last half an hour, we always say is the most important part of the day going into the next day's session. And really just another day of kind of no leadership out of the market again in any particular sector or names. We saw retailers that were under a little bit of pressure after some downgrades out of Dollar General and out of Lowe's. Then we saw a big upgrade out of Nomura to buy on Twitter, which put Twitter up about 10% on the day. The big thing that happened on the day was really the rally in U.S. Treasuries, the 10-year and the 30-year, basically rallied to the highs of the year, with pushing yields more or less to the lows of the year. And it's quite an interesting story because it's happening in the face of better than expected data that continues to come out of the U.S. Very strong data coming out, and you're getting kind of the opposite reaction that you would think. I did see a report out about a week ago that 90% of retail portfolios are short U.S. Treasuries. So you kind of just know that those guys are just going to get killed. So I don't know if that has if it's partly the positioning that to blame for that. All right, in Asia, overnight we had a bit of a mixed bag with the Hang Seng managing to climb a bit. It only finished up about 0.1%, or it's only up 0.1% as we speak. Sorry, it's still open. And the rest of the markets more or less down. We've seen some of the Chinese automakers that bounced today on the back of some favorable government policies, and we saw some retail sales out of Japan that dropped more than expected. But other than that, same sort of thing, just a drift. No real gusto behind the market in either direction. So Billy's and Rio kind of lagging a little bit in Australia on the back of some of these precious metal prices probably coming down. And obviously yesterday we were very weak here in the European session, so probably a little bit of a follow through from that as well. There's an interesting little chart here by Goldman Sachs. Basically, what they're saying is the stocks with weak balance sheets have outperformed over the last 2 years in size versus the stocks with strong balance sheets. This has kind of changed a little bit in the last couple weeks. Your more solid, more defensive, more higher yielding companies have really started to outperform over the past few weeks, and it could be a bit of a turning point. This is something that we see during bull markets. We see the high flyers, the growth stocks, the stocks that don't necessarily have all the cash on hand, but they've got this this great growth potential, or what the market perceives to be great growth potential. And those stocks typically always outperform because people are in the mood to take a lot more risk during the bull market cycle. So the fact that that's starting to turn a little bit as of late is, I think, something to take note of, and we'll continue to monitor that type of thing going forward. This morning in corporate action, we've got Foschini that's out. I'm not 100% sure what time they're out. Anybody know? No, that doesn't give us a time, so just watch for that. Should be out during the day sometime today. Have a look at those numbers. Looking for around 886 on headline earnings per share, revenue at 14.11 billion, and divvy per share expected about 280. So look out for that today when that trading state or that earnings news comes across. We've got Costco out later today in the States as well, but kind of winding down the earnings season there. All right, today's a big day of data worldwide. We've got Spanish GDP numbers. We've got local PPI numbers at 11:30. We've got U.S. GDP annualized quarter on quarter, actually expecting a contraction. There's some different reasons for that. A lot of it was because of the weather factors in the first quarter. Then we've got personal consumption, we've got core PCE, we've got initial jobless claims, which is of course the other real big one, Bloomberg Consumer Comfort, and pending home sales. A lot of data coming out of the States again today. To me, it kind of seems like it doesn't matter what happens right now, that Treasury yields are getting squashed lower, and I think that's part of the reason probably why we're seeing the precious metals drag down so low. At the moment, we've got no inflation around, and the guys are just kind of, they're not worried at all about risk at the moment, and we kind of see just a flight out of these assets like gold, these non-performing assets. All right, let's get into the maps. First one we're going to look at here is what we're just talking about now, is the U.S. Treasuries. And we're going to look at the 10-year here. And really, we've kind of got a bit of a head and shoulder setup that happened here, which we've broken down out of. It's a bit of a weak right shoulder, but bottom line, what I really wanted to show this chart is simply that we're literally dropping that entire portion of that consolidation, and we're dropping out the bottom of, as of yesterday's session, and we're seeing yields literally hit the lowest points all the way back to June last year, when we had this big spike up, when we started to unwind QE, I believe. So this is really important to me, because right now we are winding down. We are starting to wind down these asset purchases. You've got some of the Fed talk that's moving toward they're even starting to talk about when the rate hikes might start to come, and you've got the total opposite reaction happening in treasuries. Right now we've seen a total, like we've been talking about, a total breakdown in correlations across asset classes, globally for the last probably month and a half, 2 months, and it continues to go on. This is a perfect example of that. We'll see what happens today when all this big U.S. data comes out. But bottom line, this is a really important event going on in our market, and actually, typically this wouldn't be a very bullish event for equities. So this is it's really kind of pitting the equity market against the bond market. The bond market usually is the smarter of the two. So we'll have to continue to see if these yields drop over the near term, and if they do, who knows what it means for the markets at the moment. Simply just hasn't been any reaction from it as of yet. All right. Let's look at the local futures market here. I was actually looking at this chart this morning, and then when I just kind of looked at it in terms of the big picture, it's incredible how we've been in this really steep upward sloping channel now for 2 years basically. It's incredible, and it's starting to get more and more narrow. I think this is something to watch out for, because every time we've kind of pulled back here towards support, we've got a nice little bounce off there, and we haven't even gotten all the way down to support many times, because the bounces have come so quickly. But bottom line is we did just kind of hit the top end of this channel. We're starting to turn down a little bit now, so maybe a little bit of a correction in for the here for the short term at least. I think this is just incredible to be able to see a chart that can get this narrow for this long a period of time, and a trend moving to the upside on an index is quite incredible. So obviously this is not going to last forever, but I think when we move outside of these bands, it'll be quite important. All right, let's get into some single stock stuff. We'll look at Exxaro here. The mining space here locally, as you guys would have well noticed the last few days, has been absolutely decimated. You've seen it everywhere from Anglo's trading at 294 about probably 7 or 8 trading days ago, now down to 267. You've had Billiton's, which hasn't been hit nearly as hard, but also been hit off to the top. You've had Kumba, which has been hammered probably 150 $350 over the past, 3 or 4 months. You've had stocks like ARI, which have really come hard off of the top. We've had the gold shares that have taken 15% in the last 2 or 3 days. And you've got platinums, which are starting to peel off the top. We're going to look here at Exxaro. Exxaro on the 2-year chart, I mean, there's so many major pivots, major bottoms here at 137 on this level. Couldn't be any more clearly defined. Yesterday we closed at 38.50. If we drop 137 in this thing, we've got a huge downside target from here. And I think that this is one to watch very, very closely. If we drop, like we said, if we drop here, there's a big downside target in Exxaro. Continuing on that theme, look at Kumba here. Kumba's also been struggling to really hold this 350 level. If you kind of look at the last week and a half's action, we've been able to just only barely kind of hang on to 352, which were the previous closing lows. You can see as of yesterday, I believe we may have made a new closing low for the last couple of years. Yeah, see, this is 52.50 was the 52.40 was the close there. We closed at 51.51 yesterday, so we actually have taken out the low on a closing basis. And to me, every time you see these charts that kind of make it a little bit of a continuation pattern, and it gets to the level of support, and it kind of tries to bounce, and you can see here a couple times where we wicked up above 360 and has failed in the afternoon. Every day, it's kind of underperforming. To me, this is a really ominous chart. If we drop today, I'd like to see this thing drop 350 before you can really get conviction. If we drop 350, this bad boy is going to go to 300, I do believe. All right, let's look at MTN. MTN, we're going to look at this on a 30-day chart. Let's just pull it forward just a little bit. And you can see here we've had this major consolidation going on between 220, let's just get this right, 220 and about 225 right up here. And you can see how we popped up the top of that as of yesterday. Came back low. We're actually trading at about 224 and a half, and then we closed up about 60 cents in the auction. But this is important. I think if we can remain above 225, we're probably very quickly going to pop up to sort of 230 level, and that'll take us, still not all the way to the full target when you look in terms of the longer term breakout that's happened here above 220. The full target probably looks to be closer to about let's throw it at 245. So there's still definitely some more upside targets here now that we've broken out this little consolidation that was happening here at 225. It looks like we can definitely start to move higher if we can keep this close above 225. All right, and the last one I want to show is Nedbank. Nedbank really has been fought hard yesterday to kind of hang on to this 225 level. We were below there probably 15 minutes before the auction. We're trading at 224. Next thing you know, all the banks caught a bid into the end of the day. We're actually putting in a little bit of a head and shoulder pattern here, which would leave 225 as the neckline. Would probably give us a target somewhere closer to $210 if we drop it. If we take it from the wicks, we don't take it from the wicks, and we're probably looking at about 212. So yeah, if we drop out the bottom from 225 here, there's actually a reasonable setup to take us lower in Nedbank. First stop probably down here around 215, and then possibly even a touch lower. And that's it for today, guys. Thanks a lot. J. Doug back.